Monetary policy entered a new era today when the Reserve Bank announced the cessation of its bond buying program, also known as quantitative easing. Since March 2020, the RBA has materialised $350 billion and bought government bonds with the new money to get cash into the system and bring long-term interest rates down. RBA Governor Philip Lowe said today that ceasing bond purchases does not imply a near-term increase in interest rates. But the market begs to differ. The cash rate futures market, has pencilled in May as the first rate hike and has got the cash rate at 1.25% in December, which would be another 4 hikes this year. Foreign exchange traders pushed the dollar higher to mark the beginning of the end of loose monetary policy, and the share market went up 0.6%, with gains by banks, retailers, gold miner Newcrest and Transurban. And that followed a solid session in New York, especially for technology stocks, although Asian markets didn't follow today. And the main news on commodity markets was a 5.6% drop in the price of iron ore. Retail sales fell 4.4% in December, but as you can see, the trend since the start of the pandemic has been up, while also being very jerky. And that 1.1% rise in national house prices in January takes the annual growth rate to 22.4%, which is the largest since June 1989, at which point the overnight cash rate was already 17.5%. And house prices were doing a Wile E Coyote and running in midair. The crash and recession happened a few months later, but don't worry, there's a very big difference between 17.5% and 0.1%, which is what the cash rate is now. And that's finance. Thanks for watching. You can check out more finance news by clicking there. And don't forget to click subscribe down there to get all the latest updates from ABC News.